Alrighty, guys, you saw the title, you saw the thumbnail. We got to keep it real in this video. We have to go over some stocks that, in my opinion, are just flat out overvalued, screaming overvalued right now. And for me personally, I'm staying away from them. I'm not telling you guys what to do, as always. This is not financial advice, but I'm just going to break down, in my opinion, a couple of stocks here that are just flat out overvalued. So sit back, relax, take a sip of your coffee, hit that like button, subscribe if you guys find value, and get your 10 stocks from Moomoo with a $100 deposit and your 12 stocks from Webull with any amount deposited. All those are linked down below. And again, cheers, guys. Let's dive into the video. And by the way, I hope you all have a great Saturday. It's a beautiful Saturday right now, actually. It's 75 degrees here in Jersey, which, let me tell you, it has not been that cool in a while here. So with that being said, let's talk, and we're going to break down some numbers. I'm going to jump back and forth between ThinkOrSwim here and Safari. So let's talk. Stock number one, which might ruffle some feathers, but again, we're going to keep it real. We're going to keep it 1,000 on this video. Apple is overvalued. I came out and just said it, didn't I? Apple is overvalued, and honestly, a lot of you guys are going to agree with me. It's not like it's something crazy to say now that Apple is overvalued, considering it has come up over 30% in the past couple of weeks. And I'm not even kidding. No joke. Well, it's been about 2 months. So about 8 weeks, 6, 7, 8 weeks, whatever it is. It's up over 30%. It went from $129 a share now to over 170, and we're now pushing all-time highs. We're about 5-6 percentage points away from that 183 all-time high that this stock hit. When was that? In the beginning of this year, maybe on the first trading day, or maybe at the end of last year. Either way, Apple is almost at all-time highs. And if you guys have seen the macro and kind of what's going on right now, it doesn't really make sense, in my opinion. It does not make sense at all. We got news from Foxconn, which is Apple's iPhone assembler, over in Taiwan. We got news from them that they're seeing sales slowly starting to slow down. And I think I took some notes on this. Hold on, guys. Let me pull these notes up. I think it was 12. They saw a 12%. Well, first of all, they saw a 12% rip. And there's maybe not a rip. That's not the right word. They saw a 12% jump, rather, in their sales, or in net profit, rather, Foxconn did, in April to June. Now they're seeing, their outlook now is they're not going to see that jump anymore. They're seeing smartphone sales slow down. And again, this is Apple's biggest supplier. They're seeing iPhone sales, smartphone sales in general, slow down a little bit here in the third quarter. And who knows what's going to happen in the fourth quarter. And we all know in China right now, the surrounding areas, there's a lot of issues going on with the economy, geopolitical, that we're not going to break down in this video. There's a lot of crap going on. Real estate, the lockdowns, they just opened up, but their economy is still struggling. There's a lot going on over there in China. So for you to tell me Apple is almost at all-time highs, and of course China is a huge market, and Foxconn seeing these issues arise, it doesn't make sense. I mean, I'm looking at this and I'm like, what in the world is going on? So I personally, and let me tell you this, I own Apple stock. I'm holding on. I'm just simply not buying here. Why would I buy here? It does not make sense at all. And if I pull up Safari, let me give you guys some numbers here. Look at this. Apple's price to earnings ratio right now, which is also known as the PE ratio. You guys know what that is, right? It is over a 28, guys, and mind you, Apple is not growing like it once was. If I pull up the financials here very quickly, their revenue growth over, well, let me say this. iPhone sales through the pandemic, there was a huge boom, right? But that's slowing down, like we're seeing from Foxconn. And before that, the growth really wasn't all that crazy. It's not like they're growing 30% a year, 40% a year, 25% a year. Well, they did recently. Like I said, we saw a little bit of a boom over the pandemic, but it's not enough growth to justify that price to earnings ratio. And of course, we know they have a lot of cash. We have Apple has a great balance sheet, so we're not going to look at that. But I just think it's overvalued. That's just me being honest. And I said this before on the channel, and I'll say it again. I might even trim some Apple. Usually I don't do that. Last time I trimmed was last time it was near all-time highs. Well, that was back in the 180s for reference, guys. High 170s, months and months and months and months ago. Last time I trimmed was there. Actually, I might have trimmed also maybe in the 160s if I remember correctly, which I guess that was a bad idea considering now we're above that. But, of course, hindsight's 2020. But at this point, I'm not buying more. I'm just holding. I might even trim, like I said. So that's stock number one that I think is overvalued here. And if Apple starts to give, if this starts to sell off and maybe we start seeing the slow in demand, the slow in sales, all that stuff, we might start getting layoffs here in the U.S. Who knows? Maybe China's economy gets worse. Apple stock's going to come down, and that's going to drag down the overall markets, as you guys know, because Apple has a huge weighting in the overall markets right now, and they have for a while. So the next stock here, which might also ruffle some feathers, probably not. Well, actually, it probably will. I think Tesla's overvalued. They also have that China risk. Maybe not as much as Apple, but they still have China risk for sure. And by that I mean China's economy struggling. They have a factory out there, and overall, at the end of the day, guys, if we look at Tesla stock, right? Let's pull that up. Tesla stock is not as close to all-time highs as Apple is, but it's come off a huge amount from the lows here. When Tesla was at 600, that's a different story. It wasn't as overvalued as it is now. One would argue maybe 600 is near or closer to fair value. I actually think fair value for Tesla is probably like 300, 400, 500 maybe. That's a big range. But not where it is now. Let's just put it that way. Here at 9,000 or 900, not 9,000. 900 pushing $1,000 a share. I think Tesla within the macro environment that we're in right now, it's a risk. The risk reward there is not too favorable, for me at least, as a long-term investment. Now, as a trade, all right, if we do break this downwards trend line that I've drawn out here on Tesla, all right, maybe we get a trading opportunity on it. But we're not there yet at all. And if I pull back over here to Safari, do you guys want to see Tesla's price-to-earnings ratio? It's going to blow your socks off. Are you ready for this? Wait a second, guys. Let me just do this. Thanks for hanging in there. Let's see what's going on here on Tesla's price to earnings, because it is a lot higher than Apple's. We're talking over a 100 price to earnings ratio, and Yahoo Finance has them at near fair value, which I don't agree with, as I just said, but to each their own. Everybody has a different way of valuing stocks, and they have different assumptions. At the end of the day, it all comes down your price that you think it's worth. It all comes down to a lot of future assumptions. What you think the growth rate is, profitability, this, that, the third. There's a lot that goes into it. So for me, I just think Tesla, a little bit lofty. Is it a great company? Absolutely. But it's a little bit lofty. And let me actually get a little sip of coffee with that, guys. Cheers. If you guys are still here, hit that like button, subscribe. Don't forget to get your free stocks down below. Alrighty. So the next one here, and hold on, let me see Tesla's financials quickly. They're obviously growing revenue at a huge clip. And one thing worth mentioning here that you guys got to look out for, if we really get into a hardcore recession, unemployment rate going up, which we're not seeing yet, but if we do get that, huge layoffs, Tesla, I feel like their demand, although they are for the more high-end consumer, I feel like demand's going to come down. Sales are going to come down. I mean, that's what we see all the time in recessions. What the heck is it called? Well, I'm missing the word here. Auto manufacturers, they do not do well in recessions, guys. They do not do well. So for me, Tesla, it's risky as heck here. Risky as heck. Honestly, really is. And another one that's risky, which we'll wrap it up here, guys, because we're about 9 minutes in. Another one that I believe is risky. Let me go back over here to ThinkOrSwim. It might ruffle some feathers, might not. I don't know. It's Nvidia. Ticker symbol NVDA. Let me pull up Nvidia and talk a little bit about it, because we just got some news from Nvidia, I think a couple of days ago that was, which it didn't really shake the stock up too much. Maybe it did a little bit. I think it was on this day. And since it's rebounded, which doesn't make any sense to me, but Nvidia, let me pull up the notes here, guys. Stay with me. They just issued a warning. A warning. That's not good. We don't like warnings here. As compared to the company's previous outlook of $8.1 billion, I think that's revenue. Nvidia now, they announced revenues of $6.7 billion. So that is a massive decline of 19% quarter over quarter. That's not good. And their earnings are coming up in a couple of days here. I think it's next week. Or maybe the week after that. Yeah, week after next. And they're pretty much just warning everybody. I mean, I guess it's good that they did that. They don't want to blindside investors. I mean, could you imagine if they didn't say anything, they didn't say a peep, and then all of a sudden they reported and they reported that number? The stock would probably crater even more, and maybe that would have been an opportunity for me to dive in. But then again, it probably wouldn't have gotten to my price target even on that drop. But anyway, they are seeing, again, 19% decline quarter over quarter, and Nvidia did not provide income numbers, although the company announced GAAP gross margin of 43.7% versus the 65.1% previously guided. So, needless to say, Nvidia is not looking good at all, fundamentally, right now. In the short term, at least. Long term, I'm sure they'll be all right. Of course, they're going to be all right, I think, long term. But in the short term, they're going through it. And when companies are going through it in the short term, guys, that is when you want to look at it and be like, all right, is it time to invest, or is the price too expensive? And in this case, price is too expensive, in my opinion. I have said this time and time again on the YouTube channel, guys, and you know, I've said it time and time again. Nvidia is one that I was close to buying at 140, but for me, my ideal price is 110 to about 120. Even lower than that would be even better. That'd be a price where I'd be like, all right, margin of safety is built in. The risk reward is great. I want to buy it. But here, almost 80% higher from where I wanted to, or my price target, or whatever the math is on that. It doesn't make sense. It doesn't make sense. And Nvidia, if I quickly go over here to Yahoo Finance, guys, before I end off the video, Nvidia is very lofty for price to earnings. And to be honest, if I had to pick one of these, Tesla, Apple, Nvidia, right now, today, on August 13th, although the markets are closed, but if I had to pick one of these to invest in at the values right now, I'm probably going to go Nvidia, to be honest. I'm probably going to go Nvidia. But it doesn't matter because they're all still overvalued. You know, it doesn't matter which one I'd pick because I don't want to pick any of them. But if I was forced to, Nvidia would be the one. Look at this. 50 trailing 12-month price to earnings ratio, right? $460 billion market cap. What's the price of sales on this? 15 price to sales. Oh my goodness. 15 price to sales. And they do grow revenue nicely. They do. But I don't think it's, the revenue growth is not 300% a year to justify that type of valuation, or maybe 200%, whatever. You know, I'm just messing around a little bit, guys. But overall, that's it, I guess, for the video. You know, these are three stocks that we have to watch. They're very important. The warning that they issued from Nvidia, Micron as well, the semiconductors, we got to watch that moving forward. Foxconn with Apple, we got to watch that moving forward. And Tesla, of course, we always have to watch Tesla, guys. We always have to watch Tesla. So let me know your thoughts down below in the comments. Make sure to hit that like button. Subscribe if you haven't done so already. Join my Patreon if you guys want all my moves in the markets. Those are linked down below. Or go to stocksurfest.com/Patreon. If you want 10 stocks from Moomoo with a $100 deposit, those are linked down below. Those 10 stocks, each up to $2,500. And you could also get 12 stocks from Webull with any amount deposited. And with that being said, cheers, guys. Have a great rest of your weekend, your Saturday, your Sunday. I'll see you guys in the next video. Peace out.